Hello everyone, welcome back to Legend Finance, the channel that helps you navigate the world of personal finance and investments. And if you're new here, don't forget to hit the like button and smash that subscribe button as well. Why? Because today, we're diving into the shiny and sparkling world of gold and silver. Whether you're a seasoned investor looking for fresh insights or just starting out and eager to learn the basics, this guide has you covered. From understanding why these metals are so precious to exploring strategies for investing in them, we're set for a golden and silver journey. So sit back, grab a cup of coffee, and let's get started, because it's time to uncover the lustrous secrets of investing in gold and silver. Let's go! Option 1. Physical bullion stored locally. Starting with precious metals, buy physical gold and silver, known as bullion. It's a safeguard in case cash becomes worthless, a real possibility in unstable economies. Your goal? Have easily accessible gold and silver for emergencies. Go for 1-ounce coins from recognized global mints, like the US Eagle or the UK Sovereign. They're close to gold's spot price or current market value, so you're getting a good deal. Remember, the spot price is important because it factors in the costs of shaping and shipping gold. Mints add fees when selling their gold to dealers, and dealers add their markups. The final price above the gold's market value, spot price, is the premium. Your goal? Get gold at the lowest premium. That's why 1-ounce coins are recommended. Smaller amounts increase the premium, and collectible coins, known as numismatics, have even larger premiums. Numismatics are often vintage, traded among collectors, and have extra value because they're rare. But for a crisis stash, I'd avoid them. In a pinch, coins are valued for their gold, not their rarity. Plus, it's easy to overpay or get scammed with numismatics unless you're an expert. Stick with 1-ounce coins. Dealers know these well, so they can spot fakes, giving you confidence in your purchase. And when it's time to sell, dealers will be more likely to buy these known coins back. Now, what about silver? While you can buy gold and silver from government mints or online dealers like J&M Bullion, remember that it's not for everyone. Before diving in, it's smart to talk to a financial expert. They'll help align your choices with your financial goals and risks. And when buying, opt for established, trusted firms. They're less likely to cause trouble because they have a reputation to protect. Goldsilver.com is well regarded in the community for various reasons. It's known for excellent customer service, reliable order processing, and a wide selection of options. Mike Maloney's educational resources on precious metals and market outlooks are also highly appreciated. It's worth noting that the same investors back Goldsilver.com and Wealthion, lending credibility to the platform's integrity. Having transparency about the people involved in such platforms is always beneficial. Deciding how much gold and silver to buy depends on individual risk tolerance and financial goals, which are best discussed with a financial advisor. After purchasing, it's crucial to keep your holdings confidential, only sharing details with trusted individuals to ensure security. The purpose of an emergency stack is quick access. You might keep it in a home safe, a local bank safety deposit box, or somewhere hidden. Each option has pros and cons depending on your situation. Holding precious metals at home can pose personal safety risks and cause loss. If kept at home, it's best to tell no one to minimize robbery risk. Insurance may not cover significant losses from theft or disaster, so review your policy. Keeping metals in a bank can reduce theft risk but might limit access during financial crisis. It's up to you to decide the best strategy based on your personal risk tolerance. Option 2. Physical bullion vaulted remotely. For those who want to expand their holdings beyond an emergency stash, consider remote storage with bullion storage companies. This option provides additional protection without the risks associated with storing larger amounts at home. These companies allow you to purchase bullion and store it securely in a vault. For example, with services like Gold Silver, you can have your bullion stored in your name in a high-security vault. This is called allocated storage, meaning the bullion belongs solely to you, unlike unallocated solutions, where buyers share a fractional claim on pooled bullion. Your bullion can be stored in any of their vaults around the world, diversifying your country's risk. These vaults, audited several times a year, are insured at full replacement value, meaning you receive an equivalent amount of metal in case of loss. If you decide you want your stored bullion, it can be shipped to you upon demand. Overall, reputable industrial-grade vaulting services offer an excellent solution for expanding your precious metal holdings beyond your initial emergency stash. Option 3. owning paper gold and silver with ETFs/ETNs. For investors looking to speculate on gold and silver prices, paper gold and silver solutions, often represented by exchange-traded funds, ETFs, and exchange-traded notes, ETNs, are available. These options are riskier than owning physical bullion but allow speculation on price fluctuations. ETFs and ETNs are securities traded on financial markets, giving them exposure to precious metal prices. They may hold bullion or, more commonly, futures contracts, exposing them to counterparty risk, hence the term paper gold or paper silver. They don't offer the same security as owning an equivalent dollar amount of physical bullion. ETFs and ETNs are suitable for short-term bets due to their liquidity and lack of associated fees and premiums that come with physical bullion. Among the most traded are GLD and SLV, which largely rely on futures contracts. For those seeking funds fully backed by bullion, Sprott offers PHYS Gold, PSLV Silver, and CEF, both, while Vanek Merck Gold Trust offers AUNZ, which can be converted to physical bullion and shipped upon request. For higher risk, leveraged precious metal ETFs and ETNs exist. However, these should only be considered by experienced traders willing to risk potential losses. Option 4. Speculating with miners. Those with a high risk tolerance who seek potentially large returns if gold and silver prices surge might consider investing in mining shares. As mining companies extract precious metals, when these metals prices rise, so do the company's share prices. The reason is that not only is the gold the miner is selling today more valuable, but all of the ounces it will extract in the future just became more valuable too. Therefore, shares of gold mining companies can provide leveraged exposure to the price of gold. However, mining shares are highly risky, involving company risk and the fact that many have been poorly managed. Over the past decade, precious metals mining shares have been one of the worst performing market sectors. But with many subpar players having been eliminated and the remaining companies forced to improve their balance sheets and management, the prospects for these miners seem promising, given gold and silver's current prices. If you're interested in this space, experts recommend diversification by owning indices of mining companies like GDX and GDXJ. You can also follow the guidance of analysts who closely track this space and identify the most promising companies. Good newsletters include the Gold Newsletter and Gold Stock Analyst. Jeff Clark, Gold Silver's senior precious metal analyst, shares his mining stock trades for free on his Twitter account at The Gold Advisor. Though individual precious metal mining company shares can offer significant returns in a gold bull market, don't risk capital in this space that you can't afford to lose. Deciding how to allocate your capital across these options depends on understanding your current financial situation, future goals, and risk tolerance. That's why it's recommended to make your decision with a professional financial advisor. Currently, the economy and financial markets appear trapped by the Fed's actions, including a tenfold increase in currency supply since 2008 and massive stimulus in response to the COVID-19 pandemic. It seems inevitable that the US dollar's purchasing power will decline increasingly rapidly, leading to the need for tangible assets that can't be inflated away, like gold and silver. But to benefit from these metals' purchasing power protection, you must position yourself in advance of the coming fiat currency devaluation. Thank you so much for tuning in to Legend Finance. It's been a pleasure guiding you through the captivating world of gold and silver. We trust that this guide has offered you valuable insights and opened new doors for your investment journey. Whether you're an experienced investor or you're just getting your feet wet, remember that each piece of knowledge is a stepping stone towards building a prosperous financial future. Don't forget to smash that like button if you found this content useful and subscribe to ensure you don't miss out on our upcoming finance and investment guides. We're excited to continue this journey with you, sharing insights and exploring the world of finance together. Keep expanding your horizons, stay curious, and above all, stay legendary. We can't wait to see you in our next video. Until then, take care.